hopefully, you can see what I can see, which is that this is the beginning of something, not the end of something in terms of, the price of gold.
We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers.
Welcome, everybody, to another episode of Talking Trade. Of course, we have Kevin Wadsworth and myself, Patrick Karim. And Kevin, today we'll talk to you about what is happening to silver. The hottest topic. Prices have gone parabolic. People are thinking double, triple from here with no correction, or some people think there's a correction. How deep will it be? Well, Kevin's going to showcase what is actually happening right now with some objective evidence. Kevin, please.
Yeah, sure, Pat. Thanks. I'm going to take a look at both gold and silver and take a look at what the technical analysis has been telling us and how it was possible that the technical analysis was able to tell us to expect this, to tell us to expect a large upside move for the metals and really what to do once that starts, because once the move starts in precious metals, you're then left with a question about, well, what do I do next? Do I take profits? Do I just sit tight and hope for the best? So I'm going to share my screen here, and we're going to start off by looking at the gold chart. This is how it looked back in sort of 2019 when we identified this cup and handle formation that we thought was likely to develop. And that was based on a whole range of different aspects of technical analysis. And this is how it played out. But one thing I just want to show you here, this gold chart is actually on the linear scale. And I'll just scroll it forwards to where we are today. And if I put it on the linear scale, you'll see that it looks like, it's vertical, isn't it? Basically, it's a vertical move upwards from $1,000 to $4,000. But that doesn't really help us very much, because if we were to put this onto a logarithmic scale, you see something very, very different. I'll just do that again, back to the regular scale. And the regular scale makes it look as though this percentage move here, this move from 2,000 to 4,000, it's a 100% move, makes it look as though that's never happened before. But in reality, down here, 100% move, 200% move, 300% move. This move down here is several 100%, and yet this one here looks a lot bigger. So in order to make it comparable with what happened in the past, you must use a logarithmic scale. Then you can compare current price movements with the price movements that took place in the 1970s. So now that I've got that out of the way, and we've spoken about that before, we can look at this cup and handle pattern that I was talking about that formed in sort of 2019 onwards. Now, using the term cup and handle, there are some fairly strict textbook definitions that suggest that the cup and handle should be much smaller in time than this one, which played out over a period of over a decade. But you can see the cup there. Let me just put that into red for you. I'll just make it a little bit stand out a little bit more for you. So what do we know? We know bull markets take place above long-term moving averages and above the Ichimoku cloud. That's this green and red cloud structure on the chart here. So the bull market broke out in 2002, and we had a huge bull era for gold that took us up to the top in 2012. Then it broke down, and it didn't break out again until 2019. So we broke out above the long-term 3 and 4 year moving averages. 3-year moving average is the green one there, and above the Ichimoku cloud. And we've stayed above those levels ever since. So there was no reason to term long-term bearish, not just because of this chart, but also because of supporting weight of evidence. But what just happened? What did just happen with gold? What's going on here? Well, you can see very clearly a very definite resistance line here. And in fact, that resistance line, well, we broke out of that at $2,000, but there's also this resistance line that is in a way more important, that we broke out around about $2,700. You can see the price just reacted there. So what happened, to answer the question, what happened, Pat, is that we had a major breakout of the cup and handle at $2,000 that catapulted us to the resistance line that was created by the 2011 and the 1980 tops. We then saw price action break through that level, and then what's happened since is the result of that breakout. Now, clearly, we've overstretched the expected target. The expected target would have been something like this. Using classical technical analysis, the measured move would have been that, and the depth of the, if you draw this as a little miniature cup on here, the depth of that cup was replicated there, and you'd expect it to be replicated here. So we've clearly overshot the target, which was somewhere in the region of 3,637. So the target is perhaps somewhere around about $3,600, and we've overshot that to a large extent. And it's, the depth of this cup here is another target. So that there is a secondary target, which is somewhere in excess of $5,000. You'll also be able to use other technical analysis techniques like Fibonacci extension levels that also identify somewhere around about the 5,000 level has been quite important. So in a nutshell, what's happened there is a rapid release of the pent-up energy for the price of gold to rapidly accelerate and break out, not just once, but twice. Now, what's really interesting here, Pat, is if we look at gold versus the S&P, because this is where it's getting its energy from. You might look at that gold chart and think, oh, it's stretched. It's got, it can't possibly move any further. The gold bull market must be drawing to a close or likely to draw to a close soon. But gold versus the S&P paints a very, very different picture. So when gold breaks out versus the stock market, above those long-term moving averages, above the Ichimoku cloud, which I've already mentioned, as it did back here in the early 1970s, and as it actually did in the early 2000s in a series of stages, breaking out above the moving average, above the cloud, and then above resistance lines. And that's how we had a massive move for gold. It moved from $250 to $2,000. So let's fast forward to what's happening today and answer the question, is this the beginning of something or is it the end of something? Well, hopefully, you can see what I can see, which is that this is the beginning of something, not the end of something in terms of, the price of gold. So we've had the breakout, we've had a back test, and we're now hitting some horizontal resistance, which is going to be in here somewhere. You can see a sort of a zone of horizontal resistance that stretches in this area here. So we've seen a breakout, a back test, and now we've reached the horizontal resistance level. So the next thing will be probably for a pullback for gold versus the S&P, and then a final breakout above that horizontal resistance line that takes us into the next phase of the gold bull era, where we see gold very substantially outperforming the S&P, such that gold probably reaches a target in excess of $10,000 or $12,000, perhaps in the region of maybe $15,000 or $16,000 when you look at the ratios. So huge moves there. And the same for silver. If we look at silver, which of course has moved beyond $50. So again, same story. And we've got the same resistance level to look at. Remember that line for gold? Well, we're right on that line for silver. If I just put the candle chart on, you'll see that we've just touched that resistance line that goes back to 1980. On the line chart, you don't see it, but when you put the candles on, you can see that we actually touched that line. So what's happening now is a reaction to hitting that target, that resistance line. So the next move will be the really important one for silver, and that's the move above about, let's say, $56. If and when we get a move above $56 for silver, then the same sort of thing that just happened for gold will happen for silver, and the initial target might be somewhere around about $85, $90, but then you've got the longer term targets that look like this and look like that. So those are the longer term targets for silver. So that is what's just happened to gold and silver, Pat, to answer the question there at the start.
Yes, good stuff, Kevin. Hopefully that puts adds some context to where we are in these longer term cycles, and that versus the US stocks, we're barely started to move. Good stuff, man. Guys, if you enjoy this content, make sure to like, subscribe, and get some more. Take care, guys.